question. And we've actually been watching the market movements over the past week. And we've been rather surprised by the reaction. We did have a sharp sell-off on Monday, but the market came back in pretty good fashion, a little bit weaker today. But we took the interpretation of what the market was doing over this week as perhaps a little bit complacent. So we took a little bit of risk off the table last week as an opportunity because we saw some downside risks from the escalation of tariffs. And we think that the market as a whole seems to be operating under the assumption that cooler heads will prevail. And we think that that's, perhaps not the right assumption to make at this time. We do think eventually a deal will be had, but we could be in for a protracted period of uncertainty and volatility around trade.
Mike Santoli, we've ended the week down around about 1% or so.
Yes.
Albeit a lot of people also pointing to the fact that China's down about 2%, and whether you're comparing it week to date, month to date, 1 month, sure, the U.S. is really outperforming on these trade headlines relative to China.
Sure. So, yeah, if the contest is you don't have to outrun the bear, you just have to outrun your competitor who's going to get eaten by the bear, yes, then we're winning on a relative basis. I don't know that that's necessarily ultimately what investors want to bank on. My interpretation of this week, I think you could have both things be true, that it was positive that the first 5% pullback of the year was bought, that you did manage to put together a few days of rally with a little distance between the support levels of the S&P, but then it was really not that convincing or impressive a showing. Breadth was not very good. Not a lot of energy behind the buying. It just seemed a little bit mechanical. So both, I think you can kind of essentially say the market did enough to say that maybe we priced in what we know right now about the trade situation, the economic fundamentals, but it's not necessarily persuaded anybody to think that we're necessarily going to race back to the high. So unfortunately, it's a little bit of an ambiguous takeaway from the week.
Yeah, Laura, I mean, very defensive tone to the market, not only today, but this week. The fact that you have seen utilities, healthcare, consumer staples holding up relative to the rest of the market here. What is the takeaway, and is that where investors should be positioning themselves?
Sure. So I think we're seeing this ongoing push-pull between the uncertainty around the U.S.-China trade situation and then the reassurance that we're getting from corporate earnings. So right now we're in the very tail end of the first quarter earnings season. And so far, what we've seen is results beat by around 4.5%, so much better than expected. Coming into this season, it was actually expected that profit growth was going to decline. So I think we're going to continue to see this dynamic where the China situation continues to weigh on the markets, but at the same time, we have, corporate earnings, corporate guidance to reassure us, and we also have a pretty strong economic backdrop. So going forward, I would say, our top overweights are technology and financials. So we're kind of taking an approach where we want to stay exposed to growth, but we're also protecting ourselves on the downside with an underweight to industrials.
Todd, a lot of people focusing on which products, which companies have the most direct exposure to China, but you also think people are overlooking the impact on FDI, foreign direct investment. Todd.
Oh,
okay.
Sorry,
we'll come
correct.
back. Todd is there. Sorry, Todd, continue.
Correct. Thank you. On the question on FDI, the key variable there is a lot of people look at direct trade as being the barometer of global commerce. And quite frankly, I think FDI is a far more important metric to understand the nature of global trade. We've seen FDI retreat the last several years, but encouragingly, we're optimistic that FDI flows reinvigorate next year, alongside, I think, a resolution between trade tensions in the world's two largest economies. There's reason for optimism, I think, beyond what we've heard.